In this video, I will be sharing an amazing content about MACD indicator, one of the highest win rate strategies you can possibly do in trading. But before we start, be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. What is MACD indicator? MACD stands for Moving Average Convergence Divergence, one of the most popular technical indicators used by traders. It is very easy to use, works in every single market, and most importantly, it makes money. Essentially, MACD indicator uses moving averages to find trends in the market, skilled in it as well. If you are an experienced trader, you must have heard about this popular MACD indicator, and it is itself honest. Let's see how to pair MACD indicator with other indicators for better performance. Let's add the MACD indicator to our chart. Step 1. Go to TradingView or whatever chart website you prefer. Step 2. Then go to Indicators tab. Step 3. Search MACD and click the top one. Now that we have the MACD indicator added, let's make sure we know how the MACD actually works. MACD indicator is made up of 4 different components: MACD line, the signal line, the histogram, and the zero line. MACD line, which is the blue line, and in most cases it is usually a 12-day moving average. Signal line, which is the orange line, and it is usually a 26-day moving average. The histogram represents the difference between the MACD line and the signal line. Properties of histogram are: smaller the space between the two lines, smaller the histogram gets; bigger the space between the two lines, bigger the histogram gets. When the MACD line crosses above the signal line, the histogram turns green. When the MACD line crosses below the signal line, the histogram turns red. Finally, the zero line, which represents the center of the MACD indicator. So let's see how to use MACD indicator. MACD indicator is insanely good at finding trends in markets. You can tell if the chart is about to have an upward trend just by looking for the cross upwards between the MACD line and signal line. Let's understand more with an example. Here the MACD crosses above the signal line, which indicates the chart is in upward momentum, and here the MACD crosses below the signal line, which indicates the chart is in downward momentum. To know about momentum, you can use histogram too. If the histogram is getting bigger, that means there is increase in momentum, and if the histogram is getting smaller, there is a decrease in momentum. So let's see how to use this indicator. When the line crosses upwards below the zero line, you can enter the trade. And when they cross upwards above the zero line, you wouldn't want to enter the trade. It's the same concept with shorting too. When the line crosses downwards and it is above the zero line, you can enter into short trade. This is how you use this MACD indicator. MACD indicator is extremely easy to use, as you can see just by watching these lines. Though it was easy, MACD indicator works well if the market is in trend. If not, traders encounter major problem if they only use this indicator by itself. Let me explain with an example why this doesn't work. 1. Here the MACD indicator is doing a great job indicating when the price is about to move upward because the chart is in upward trend. 2. But here the price is in downward trend, and the MACD indicator is signaling to buy long even though the price is going down. So how to fix it? If we are trading long, we always wanted to trade when the market is uptrend and not in the downtrend to escape from the odds. So an easy way to figure it out if the market is uptrend, by adding 200-day moving average. So how to add moving average? Step 1. Go to the Indicators tab on TradingView and type EMA, which stands for Exponential Moving Average or Moving Average Exponential. Step 2. Click the top one, then you can go here. Move to Settings of the EMA. Step 3. Go to Inputs, change the length to 200, which is going to make it a 200 exponential moving average. Step 4. Then move to Style. I like to style it in red, but you can make it whatever you wish. Once we have the EMA indicator added, you'll see a single line. If the price is above that single line, the market is in an uptrend. And if the price is below that single line, the market is in an downtrend. So after learning we want to trade only in an uptrend market, and if we are going long, we have to put it all together. Buy only if the MACD line crosses upwards below the zero line mark and the current price also is above the 200-day moving average. What if you are going short? Do the exact opposite. Buy only if the MACD line crosses downward below the zero line mark and the current price is also below the 200-day moving average. This is a very powerful combo and will guarantee only when the market is in an uptrend. So as an example, we would want to enter a long trade because the MACD lines are crossing upwards below the zero line and the current price is above the 200-day moving average. Now I am going to set a stop loss below the 200-day moving average. So this 200 DOY almost act as a wall that the price has to break through to hit the stop loss. Then I like to have a 1.5 profit ratio for my profit target mark. So for this example, the strategy worked exactly as we wanted and we made money, but there is still a chance of making it even better. Let's have a look. The MACD indicator with 200-day moving average works well only if there is a lot of price movement. And this strategy gets too iffy and give false signals when the chart goes sideways and start losing momentum. As I said, you can see the chart is moving sideways and lost all of its upward momentum. But the MACD is giving lots of false signals. If you trade now, you have more chance of losing money. So how to fix it? We have combined the MACD with price action. To do this, identify a key support or resistance where the price hits and bounces. So as you can see, the price goes down, hits this point, and reverses upwards. The next step is to wait until the price hits the same key level again. Once it does, we are expecting the price to bounce off the support and move upwards just like the previous one. Note, just because we made a support and bounced off this before doesn't mean it always happens. It can easily break through the support and drop lower if it doesn't have enough momentum. So how we can make sure the price is about to change in momentum? That's where we bring out the MACD indicator. So what you do is make sure the price is above the 200-day moving average. Once the price hits the support made, wait until the lines on the MACD cross below the zero level, and that's when you enter the trade. This is how the MACD 200-day moving average and using support and resistance levels gives an extremely high win rate with this strategy. Your goal should be to only trade those opportunities that suit your risk management. I suggest you to test it for yourself before investing real money into it. So if you like this video, then be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos.